This is the MTPredictor weekly market update for January 4th. So this is our first update of the new year. So hope you had a great holiday season and happy new year to everybody. Well, let's get to it. Don't want to take too long here, but here's the S&P on the daily chart. And as the S&P was pulling back here, this is where we're looking for a bottom intraday to come in. We got that in the big kind of Christmas rally into the holidays there. We did get that as anticipated. Now, as the market did rally up here, you can see, I'll take a decision point. You can see the decision point sell signal on the chart. That's the resistance level here that the software was seeing, in addition to the fact that we had some divergence. So we had a higher high in price here with a lower high in the oscillator here on our STF, our strong trend filter, indicating divergence. The red seller's candle that formed here, that was indicating that sellers were now overcoming buyers for the first time in that resistance area, and that's set up on December 30th. Alright, so if I right click there, choose analysis from the drop down, here's the setup, the entry, the stop. The target there would be about 7.8 times greater than the initial risk at 1945.50. And those that have the software know that the 100% initial risk line has been achieved, so stops can be moved to break even at this point for a risk-free trade. Will this get follow through? Well, we'll see. If I go to the weekly chart here, you can also see we've got a decision point sell signal here on the weekly chart. I'll put the analysis on here. So the entry there would be at 2038.50, which we haven't reached yet. If that does reach, that would be executed again. If we reach the 100% initial risk line, stops can be moved to break even. There's the final target there, or the initial target, I should say, down on 1770. That's the weekly setup there. And then finally, let's just look at the monthly chart here. So on the monthly chart, I'll look for the Elliott wave pattern here. You can see we've gone wave 3 up, maximum wave 3 up here. We had strength on our STF coming in before we reached the typical wave 3 target. That was indicating to us that there was going to be more upside ahead, and that they would take this target out. And now they've reached here our maximum wave 3 target. Now, interesting enough, you can see these high volume spikes. These tend to coincide with turns in the market here. So we can see the market was selling off here. We began to get some high volume spikes. This was indicating that the market may be getting ready to turn back to the upside. Okay. Here we had another high volume spike as the market was selling off here. Again, we anticipate a turn up. Another high volume spike as the market was moving higher here. We anticipate that it will pull back. Oops. And then the high volume spike that came in here as the market was again selling off. We anticipate a bottom being put in and a rally ensuing there. Here's the next high volume spike. Again, the market was selling off. We expect that professionals may be stepping in and buying that. And now we've got one here as the market again was moving higher. We've got some maybe professional selling stepping in here. Alright, so we already have positions on the daily chart there. The weekly chart may be setting up if we take out last week's low, and then maybe that will get then the monthly to begin to turn there. Now the correction again maybe shallow, so your stops can be to break even there. But we'll see how these play out. We'll see if this eventually does get the monthly to turn and begin to correct a bit. Again, I don't know whether it'll correct back. If I take a wave 4 projection here, it would be all the way down to 1700 on the monthly chart here. Again, bigger picture stuff. But the correction may be more shallow as we got here and here. We'll see how that plays out. Right, next I want to look at the dollar because again, so much is dependent on what the dollar is doing. And if we look at the monthly chart here, remember we have this, what we call our Holy Grail trade set up on the monthly dollar chart here. So we had our major low here where the major support level was. We anticipated a rally here. This rally becomes our wave 1. This is the first ABC correction, which Elliott said many years ago was the best time to be a buyer. We projected our typical wave 3 target, since if this is a 1, this ABC correction is in wave 2, and we've got our wave 3 target here, and you can see the dollar is quickly now approaching the typical wave 3 target. We do have strength on the STF, which means they may even exceed this this target here. If you're long this position, you could be trailing with a trailing stop. But that's the target there at 92.41, or the initial target anyway, in the dollar. So again, we were expecting dollar strength, and if the dollar continues to be strong into this target, then I find it difficult to to try to pick a bottom. And like if we look at oil, oil is in, if we go to the, this is the monthly chart here, so let's just look at this. Here's the last major pivot that hasn't been exceeded yet in terms of our decision point support. You can see we're in the monthly support now. We're at the bottom of that support level, and you can see as the dollar was continue to explode higher, it's putting pressure on oil. So oil, this normally is a support level, but if it fails, then the decision is that the trend should continue down. Now this chart doesn't go back fast enough to get any further enough to give any more support. So if this breaks down, then $50, a nice round number support there. That gives way, then chances are we're going much lower. Same thing with the metals. If the dollar strength continues, it's going to be very difficult for the for gold and silver to get off the floor here. Now gold on the monthly chart made this nice little 5-wave pattern correction here with the DP, so we've got divergence down here as well. And if I do the analysis, you'll see the target is the DP off of the wave 4. Alright, but like I said, it's going to be difficult as it's a gold is a competing currency with the dollar. If the dollar is going to go higher, the tendency is that the metals are going to go lower here. We look at well, let's look at the weekly chart here. We're in areas where metals should find support, and you can see that's why things are kind of bounced off of those levels. I just don't see how much fall through they're going to get due to the fact that the dollar is continuing higher. Now if the dollar reaches that wave 3 target, then maybe we get some selling coming in the dollar there as it goes into a monthly wave 4 pullback, and that maybe gives some relief to oil, gold, and metals. Maybe get some buying coming in there. You can see this was the TS2, that's the wave 4 ABC correction in wave 4. Gold reached the minimum wave 5 target here, and that's where we got the bounce. That's what we would anticipate. On the daily chart, we also had a 5-wave pattern down here, and that basically is where gold is. Let me just make it a little cleaner here. Alright, there's the 5-wave pattern down here. Normally the correction would be back to the wave 4 DP. I just don't know if the dollar is going to allow it to get back up into that, around that 1280 area. Alright, so I want to keep an eye on. Alright, we'll keep it short here. This week we've got a full slate of economic data this week, starting slowly on Monday and Tuesday. Wednesday we get into FOMC minutes, the jobless claims on Thursday, and employment on Friday. So first full week, all the traders should be back. So it should be a decent trading week. Volume should come back there. So we'll take a look and see how the things progress, and we'll reevaluate next week.